Welcome back, everyone. This is our Gold Weekly Review. My name is Angelo Zittis, and this week's title is Changing Circumstances is the Only Constant in Life. Gold's price managed to stabilize near the round number price of 1700 in the past sessions, somewhat displaying an indecisive appetite. During the past days, many updates that affect gold's price have developed, and this report aims to briefly explain some of the most important ones. Our main idea is to provide news blended with our own opinion, but the decision as to what will follow is for you to make. First, we would like to start with a view by Goldman Sachs, as they believe that the global economy has probably reached its bottom. The idea was based on the simultaneous easing of lockdown measures around the globe. Countries in Europe and in Asia are starting to uplift production operation and services activities, as more people have started going back to work. The damage on the global economy is already severe and is estimated to have led to a drop of 16% for the global GDP since the start of the year. Yet, things could start improving on fast pace given the outbreak remains under control. From many financial releases that relate to the US, Europe, and Asia, figures do not seem to be improving in April, but due to the fact that in the past days people are returning to work and activity has increased, there are hopes that May could show some improvement. Yet, in the US, the weekly initial jobless claim figure was better compared to the previous weeks, which could be signaling some bottoming out for the American employment market. Adding to the positive sentiment of the general market, countries are seeing reduced numbers of coronavirus cases and reduced numbers of deaths. On the contrary, however, today in the Asian and European session, reports have surfaced that the US expects the effects of the virus to follow them into June, and the death toll is expected to rise. Even though these are estimates, the news counterbalances the positivity from other nations that are finally making a new start. In our intro, we also noted that the precious metal is currently in an indecisive motion, in our opinion. Now, some analysts believe that the global economy is currently moving in a recovery mode, while others consider we are in a deep recession. Even though we do not have solid evidence of a rebound taking place, we have seen in the past days oil prices picking up. Although this does not relate directly to gold price, from the demand of oil, we could suggest that activity has indeed increased. If activity has started picking up, it means some economies are already operating. This reduces somewhat economic risk due to the fact that some businesses that were facing increased costs with no revenues could start counterbalancing the negative effects and manage to produce cash and save jobs. Economic risks tend to fall when economies are in motion, which in our opinion could invite bearish tendencies for gold's price. At this point, we would also like to note some upcoming financial data to be released in the following days that could move gold's price. First, as noted, the weekly initial jobless claims coming out on the 7th of May could be of great interest for gold traders, as a figure better or worse than expected could provide volatility. Finally, the star of the week is the US employment report coming up on Friday that is usually a market mover and could even produce significant volatility upon release. Now, as a conclusion, we would also like to warn against potential headlines regarding the trade situation between the US and China that has returned to the market's attention lately. If the confrontation is to continue, the USD and gold's price could become reasons to express some worries investors may have. Moving now to our technical analysis, this is gold's 1-hour chart. Now, the levels we have noted in a possible downward momentum, are the S1 1695 and the S2 1674.40 and the S3 1660 level. We would like to emphasize the S1 1695 that was tested many times from the 1st of May until today, but was not breached, while the S2 was also seen last time on the 1st of May, which makes them both relevant to recent activity. Levels we have noted in a possible upward momentum are the R1 1717, the R2 1738, and the R3 1750 resistance levels. All these levels have been seen in April, except the R3 1750, which gold's price aimed for but came at 1747 on the 14th of April, not being able to clearly reach it. Yet, we tend to believe gold traders could be aiming at round number levels. The RSI indicator below our chart is running on the 50 level, confirming the ambiguity surrounding the yellow metals pricing activity in the short term. Now, we hope you found this report useful. Thank you very much for your time and enjoy solid trading.